Well, the Dow, S&P 500, and Russell 2000 hitting record intraday highs while yields pulled back after President-elect Trump named Scott Bessent as his nominee for Treasury Secretary. Joining us now is Loretta Mester. She is the former Cleveland Fed president and a CNBC contributor. Loretta, great to have you. So Scott Bessent, this pick, mainstream, I guess, for Treasury, but for a president with some very different ideas about tariffs and immigration. How should investors watch the way Bessent, assuming he is successfully confirmed, navigates that?
Yeah, so, John, thanks for having me. I don't know Scott Bessent personally. I'm actually very glad they went with the business as usual choice, as he was called. This Treasury Secretary is an extremely important position. I mean, it affects not only the U.S. economy, but the world economy, because it has responsibility over so much, including the public debt in the U.S., the U.S. economy, overseeing, the U.S. Treasury market, the IRS, taxation policy, international, economic diplomacy, financial market functioning and regulation. And so I'm really hoping that Scott will really surround himself with people knowledgeable in those areas rather than idle. Also pick people who are going to think through things rather than being capricious and keep their focus on what's best for the U.S. economy and the stability of the financial markets. I'm also hoping that he educates himself on the importance of the Fed having independence when it comes to setting monetary policy. As you know, that was sort of discussed before during the campaigning, but I think people have been explaining why it's very important to have an independent Fed in terms of its monetary policy setting. I think they're going to, we don't know. There's a big uncertainty around where fiscal policy is going, but we know sort of the pillars that they're looking at in terms of immigration, deregulation, taxation and spending policy, and of course, tariffs and trade policy. So they have different cross currents, but even before you think in terms of fiscal policy, if you think about the U.S. economy and where it's been going since the Fed began easing interest rates, there's just a lot of positive momentum in the U.S. economy. If you look at the recent data, growth is very strong. It's well above trend now. The labor market is solid. Inflation is, yes, it's down from its peak, but the improvements have slowed. We were worried about risks to the employment side of the mandate, and I think there's lower risks now on that side that things will deteriorate significantly.
Okay,
and
how would you
higher risk to inflation? So all of those movements and the balance of risk and changes in the balance of risk suggest that the Fed will wants to continue to bring interest rates closer to neutral, but they're going to have to go slower than they anticipated.
You mentioned Fed independence. How would you expect a Treasury Secretary to influence the direction of that and communicate about it so investors would be able to tell whether he's having an influence on the president-elect where that's concerned?
Look, all presidents on, monetary policy, some more than others, and that's perfectly within their purview. But things that could disrupt the Fed in terms of, trying to influence policies and more than just discussing it. And I think the Treasury Secretary can actually talk to the administration and make sure that they understand that, yeah, it's okay for you to say things every once in a while about Fed policy, but there's a demarcation with which you can say something, but then actually try to enact things that will diminish the Fed independence. And so I think that's important for people to realize that there is a reason that, and this is not just in the U.S., there's study after study after study, and the trend is towards more independent central banking because you really don't want short-run considerations to influence monetary policy, which, as you know, affects the economy over the medium and long run. So the Treasury Secretary can be that adult in the room, if you will, who can really talk about that importance, the importance of the Fed setting monetary policy. And, yes, administrations can comment on it, but it's different than trying to control it.